Imagine a game, a really high-stakes arena where, like, almost 90% of everyone who plays, they lose everything.
Everything.
Accounts just wiped. Dreams completely obliterated. What if the rule book, the one you were given for this game, was basically a lie?
A complete deception.
What if the so-called secrets you paid good money for, the indicators you relied on, what if they were just part of a grand deception, meticulously designed just to make sure you fail?
That's the chilling possibility, isn't it?
Today, look, we're not just breaking down some book. We are ripping open Tom Hougaard's, frankly, electrifying expose, Best Loser Wins. Why Normal Thinking Never Wins the Trading Game.
That's a powerful title.
It is. And this isn't going to be some polite little summary. Think of this more like a cinematic journey right into the chilling heart of market warfare. We're revealing the brutal truths and the single most counterintuitive secret that will either, well, transform your trading life, or it'll explain with brutal clarity exactly why you might still be bleeding cash.
And the reality is stark. It's an undeniable fact, really, one that, traditional financial education often sweeps under the rug. Just look at the numbers.
The actual data.
Yeah, the data from major brokers. It shows these astronomical failure rates. CMC markets, 75% of their clients lose money. Saxo Bank, 74%. FXPRO, 77%. It's staggering.
Wow.
And Hougaard, he doesn't mince words at all. He says, if trading was a school, it would be closed.
That's quite a statement.
It is. Because think about it. No school could survive with those kinds of results. And this isn't about people not being smart enough. It's not about lack of effort either.
Right. People put in the hours.
They really do. It's about something, well, much more insidious. A fundamental flaw in the very way we're all taught to think about trading. A flaw that's deeply embedded in what society just considers normal thinking.
Okay, so here it is. The forbidden truth, maybe? Raw and, unvarnished. The path to actually making massive sustained profits in trading. It isn't paved with complex charts or like esoteric indicators or those guru strategies you see peddled in these ridiculously expensive weekend courses.
Right. The ones promising the moon.
Exactly. The truth is so profoundly counterintuitive, so deeply buried under all this conventional wisdom that it forces you, really forces you to question everything you thought you knew about how markets work.
It's not about finding that perfect entry or that perfect exit point. It's something else.
Something hidden right there in plain sight.
And look, this isn't some abstract market theory we're talking about. This is about your money.
Yeah, your actual cash.
Those moments of frustration, when success feels like it's always just out of reach, when you're pouring all this effort into strategies that just keep losing.
Wow.
Hougaard's work, it really unveils this forbidden knowledge, the stuff that fundamentally separates the sacrificial lamb, the constant loser, from the predator, the real winner in this incredibly unforgiving trading jungle.
You're about to discover how the very tools you're given, the so-called bargains you're taught to chase, they aren't pathways to profit at all. They're more like elaborate traps, specifically designed to ensnare you.
The illusion of a discount.
Yeah, the lure of cheap assets. It's all just this meticulously crafted deception. But honestly, that's not even the craziest part of what Hougaard reveals.
No, because beyond these external market traps, there's this silent, brutal war raging inside your own mind.
Guide your head.
Exactly. It's a psychological battlefield.
Yeah.
And the big players, Wall Street, the institutions, they really hope you never, ever figure out how to actually win that inner conflict.
Oh.
And listen closely here, because there's this one chilling secret buried deep within Tom Hougaard's own personal journey, a transformation that completely reshaped his approach. And it's something almost nobody has picked up on.
Okay, you have to stay with us. Like, really, all the way to the very end. Because the biggest revelation, the single line from this book that changes everything about how you approach trading, the line that completely redefines winning and losing, it's waiting right there for you in the final minutes of this deep dive.
Prepare to have your mind, well, fundamentally rewired.
Welcome to the Profit Cabal.
Yeah.
This is the place where trading's forbidden truths are exposed.
Okay, let's dive in. Hougaard's journey into this world, it didn't start with some big win. It started with, well, a desperate, almost obsessive love affair with the markets.
Right, not success first.
No. Picture a young guy just driven by this insatiable desire to crack the code. He devoured every single book he could get his hands on, earned 2 university degrees, economics and finance, and spent just endless hours staring at charts, trying to solve what he genuinely believed was this elaborate, complex equation.
Trying to find the formula.
Exactly. He meticulously studied everything. Fibonacci ratios, that tool for potential price levels based on math sequences.
Yeah, I know Fibonacci.
That, Keltner channels, Bollinger Bands, volatility indicators. He even went into the more, let's say, mystical realms like Gahn and Murray math. He printed thousands and thousands of charts, drew lines, circles, convinced there was some hidden universal law he could uncover.
He even looked at tides.
Yeah, he developed models of the tide swell in the Hudson River. Believing the universe's rhythms held the key, he really went deep.
Wow. Okay. So all that effort.
All of it. Despite the immense effort, the academic background, this relentless pursuit of knowledge, it only led to, as he vividly puts it, sore toes.
Sore toes.
Yeah.
Yeah.
Sleepless nights, profound anger, just this deep aching hurt in his soul. He writes, and this is key, the market is not an equation to be solved. You are far more complex than a model could ever capture.
So the logic failed him.
It utterly failed him. The market proved to be this elusive mistress, as he calls it, something no one truly understands, defying universal laws, being everywhere and nowhere. And this early, really agonizing struggle, it just highlights this core, uncomfortable truth. Conventional economic thinking, the pure logic taught in universities, and even technical analysis, when you use it in isolation, it consistently fails the vast majority of people.
It's like the game isn't played by the rules you've been taught.
Precisely. It's a different game altogether.
Which brings us right to the charlatans, doesn't it? The so-called gurus selling their secrets in these wildly expensive weekend courses.
Oh yeah, you've seen them.
We all have. They flash pictures of helicopters, private jets, promising untold riches, usually just through simple technical analysis alone.
Right.
They dangle this lure of a lavish lifestyle, and it's, an irresistible draw for people desperate to make it.
But here's the dark secret, right? The thing they never show you.
What's that?
These gurus, they never, ever show their real-time losing trades. Ever.
Ah, right. Only the winners.
Always after the fact. It's always a highlight reel of these perfectly executed, effortlessly profitable entries and exits. And this creates this really dangerous illusion that losing is a mere inconvenience.
Like it's just a small bump in the road.
Exactly. A minor blip on your path to becoming your own personal ATM. It's a total deception, and it's designed to bleed your account dry while they pocket your course fees.
And then you try it yourself.
Right. It's only when you actually sit down in front of the screen on Monday morning, after your overpriced weekend course, and the market is moving unpredictable, raw, that the illusion just shatters.
You realize it's not that easy.
Not at all. You realize this game is way harder than the guru made it sound. And the hard data, it backs this up completely, revealing the cold, hard statistics that just rip this fantasy apart.
The 70–90% failure rate you mentioned?
That astronomical failure rate, yeah, across major brokers. As Hougaard provocatively says, if trading was a school, it would be closed because no educational place could survive with results that bad.
And it's not about being dumb.
No, it's not intelligence. It's not effort. Remember, it's that normal thinking is fundamentally flawed, maybe even designed to fail you in this dynamic, highly emotional arena of trading. But the question is why? What exactly is this normal thinking that keeps tripping everyone up?
And nowhere is this normal thinking more insidious, more just destructive than in what Hougaard chillingly calls the supermarket trap.
Ah, the supermarket trap, yes.
We've all been there, right? You see toilet paper, 50% off. Or that designer jacket during a crazy summer heat wave, suddenly discounted. Or, cheap washing liquid. Our human nature, our primal wiring just screams, bargain, buy low, sell high.
It's deeply ingrained.
Totally. This impulse is so beneficial, so pleasurable, so logical in everyday life. But it becomes a deadly weapon turned against you in the markets. We are hardwired to seek value, to buy things when they're cheap. It's like an internal command we can't ignore.
But trying to apply this buy low, sell high logic directly to financial markets, Hougaard calls it a sure recipe for ruin.
Ruin. Strong word.
Because in trading, there really is no cheap or expensive in the way we normally think. There's only the prevailing price. The market isn't some supermarket running special offers on stocks that have fallen to quote-unquote incredible lows.
Like Marconi, he mentions.
Exactly. A stock like Marconi that dropped from 1,200 pence down to a mere 32 pence. It isn't cheap. It's basically a decaying corpse of a company. Your mind, though, seeking that emotional hit of finding a bargain, it blinds you to the brutal reality of a market that's in complete freefall.
So that helpful instinct.
That ingrained instinct, so rational in the physical world, ensures you will consistently try to catch falling knives in the trading world, over and over again.
And we're going to see exactly how this specific delusion ruined fortunes, aren't we? Even a seemingly miraculous one.
Oh yes, this hidden wiring in your brain, it's about to be exposed in a big way.
Which leads us perfectly to maybe the most dramatic and, chilling story in the book, the 8 million catastrophe. Hougaard calls it the hot dog in Paris story.
It's a classic.
Okay, picture this. It's 1992. There's an Englishman, owns a printing company in East London. He's on vacation in Paris.
Right.
He buys a hot dog near the Eiffel Tower, and the price, it just shocks him. It's outrageous. He tries another stand, same crazy price. So what does he do? He walks into a supermarket, meticulously starts noting down prices for everyday stuff, milk, bread, whatever. Then he rushes back to London.
Okay, comparing prices.
Exactly. He compares them to the prices in his local supermarket back home and realizes something profound, something apparently no one else was really grasping. The French franc was massively overvalued compared to the British pound.
This was before Black Wednesday, before Soros made his big move.
That's right, before the famous Soros trade. So this Englishman, armed with this simple yet brilliant insight fueled by that basic supermarket instinct for value, right? He puts down just a 5,000-pound deposit. And he relentlessly pursues this conviction he has.
He wasn't even a pro trader.
Nope, just a really keen observer. And he pulls off what sounds totally impossible. He turns that $5,000 into a mind-boggling 8 million pound profit just by betting against the Franks.
Wow. 8 million. That's life-changing.
An epic, life-changing win. You'd think, okay, story ends there, happy ending, right? Triumph.
There's always a but in these stories.
There is. Here's the cliffhanger. The unseen force that makes this story so damn crucial. He later went on to lose all of that 8 million pounds. And then some.
All of it. How?
What unseen face, triggered by the success itself, caused this absolutely spectacular downfall. The key isn't in the price of Parisian hot dogs. It's deep inside his own head.
The answer lies right there, doesn't it? In the most treacherous battleground of them all, your own brain. Hougaard just lays it bare. This hidden war within, revealing how your subconscious brain, which is hardwired for survival and desperately seeks to avoid pain, actively betrays your trading success. It's this relentless internal conflict, a fundamental cognitive dissonance that traps almost everyone.
Okay, break that down. How does it work?
Well, take a losing trade. You enter a position, market moves against you. What happens? Your subconscious brain, that primitive, powerful survival engine, it just screams, hold on.
Don't sell, don't sell.
Right.
Yeah.
It cleverly masks simple, irrational hope as if it were rational analysis. It whispers that the market has to turn around, that it's just a temporary dip. And it does all this for one simple reason: to avoid pain.
The pain of realizing the loss.
Exactly. Because the act of crystallizing that loss, of hitting the stop loss and seeing your account balance actually drop, that makes the pain real, undeniable. So you cling on, bleeding cash, driven purely by this primal need to avoid discomfort, essentially believing a lie just to escape an immediate, uncomfortable truth.
But here's the really mind-bending paradox, the cruel twist in the tale. This exact same pain avoidance mechanism, it also sabotages your winning trades.
How so? That seems counterintuitive.
Your subconscious, terrified of the pain of seeing the profit disappear, pushes you relentlessly to take profits way too soon.
Ah, okay. Fear of giving it back.
Precisely. You snatch a small gain, you feel that fleeting moment of relief, only to then watch in agony as the market soars another 100, 200, maybe even 500 points in your favor, leaving you with just this bitter taste of regret and massive missed opportunity.
That old saying, you can't go broke taking a profit.
Yeah, that internal dialogue is often just your subconscious preventing you from holding on for the truly massive, life-changing wins that actually define successful trading. It's like a self-inflicted wound, a psychological ceiling you put on your own potential.
And then when that pain, that loss, finally becomes just undeniable, maybe you've held on to a losing position for way too long, it triggers another desperate self-destructive impulse.
Which is?
The urge to double up. Averaging down.
Oh no, adding to a loser.
Exactly. And this isn't strategy. Hougaard calls it a primal scream of an ego under attack. It's a desperate, completely irrational attempt to get rid of the pain by just throwing more money at the problem.
Trying to make it back quickly.
Yeah. You've lost money, and now your mind, instead of learning the lesson, pushes you to throw more good money after bad, convinced you're just about to reverse your fortunes with this one bigger bet. It's pure emotion driving a potentially catastrophic decision. And that's the exact moment the market predators, the pros, they just pick you clean.
This inherent irrationality then, this deep-seated emotional response.
Hmm.
Is this why Hougaard argues that the market is all about perception?
Absolutely. Conventional economic theory, what they teach you in school, preaches rational markets, right? Where everyone acts logically based on perfect information.
The efficient market hypothesis.
Exactly. But reality, especially in the fast-paced world of day trading, is just a brutal psychological battlefield. He talks about his own chilling experience shorting the Dow index during the early days of the COVID-19 pandemic.
Okay.
He wasn't shorting based on, like, the virus's fundamental impact on GDP or anything. He was short simply because he observed overwhelming fear in the other market players.
He saw the fear.
He saw the fear. His job, he realized in that moment, wasn't to understand the virus itself, but to understand the emotions of the other participants. They are scared, he states, almost clinically, and I have spotted their fear, so of course I am short.
Oh, that's cold, but revealing.
It totally reveals the true nature of the market. It's this dynamic, emotional entity driven by human sentiment, fear, and greed, not just cold, hard data. It's a dance, and if you're not attuned to the music, you'll just get trampled.
And its psychological battlefield, it sounds like fertile ground for seeing things that aren't really there.
Precisely. It leads to what scientists call apophenia, or as Hougaard might put it, the curse of patterns. It's our dangerous human tendency to see things that aren't there, to perceive meaningful patterns and connections in random noise, especially when our minds are desperate for order or some kind of validation for our biases.
Like seeing faces in clouds.
Kind of, yeah. Think about overbought or oversold indicators on charts. Are they objective truths? No. Hougaard argues they're merely emotional expressions of perceived cheapness or expense. Wishful thinking, often.
And candlestick patterns.
That's where the fraud of the candlestick guru comes in. Patterns like the shooting star, that bearish reversal pattern, or the hammer, the bullish one, they're widely taught as these reliable signals.
Yeah, they're everywhere.
But actual academic research, meticulously testing these patterns over decades of real market data, confirms they have little forecasting reliability, very little.
They literally work consistently.
Not in the way people think. Your eyes, Hougaard warns, will only see what they want to see. You end up hallucinating these perfect trade setups that simply never existed in the chaos of real-time trading. This cognitive bias costs traders dearly, trapping them in this illusion of control and just reinforcing dangerous habits.
Which brings us then to this crucial paradox. The title of the book itself, the core of Hougaard's, well, forbidden truth. Best loser wins.
Yes, it sounds wrong, doesn't it?
It really does. But it's not just a catchy phrase, is it? It's the actual philosophy that separates that elite 1% of winners from the 99% of, well, chronic losers.
And Hougaard is blunt about it. He says, I am exceptionally good at losing.
Good at losing. How?
It's not about winning more trades than you lose, necessarily. It's about how you lose. It's about conditioning your mind, training yourself to lose without anxiety, without loss of mental equilibrium, without emotional attachment, and without fostering feelings of resentment or desire to get even.
Take the emotion out of the loss.
Completely. It's a radical departure from everything society teaches us about success, about winning being everything. Here, it's about becoming essentially a losing machine, a graceful loser.
He even says his technical analysis knowledge is just average.
Average at best, he admits. What truly sets him apart, he argues, is his profound knowledge of myself, understanding his own triggers, his weaknesses, his emotional responses.
Self-awareness.
Deep self-awareness. The true measure of your growth as a trader, he insists, isn't what you know from some textbook, but what you do with what you know in the heat of the moment, when your subconscious is screaming at you to do the wrong thing.
So it's not about talent.
No, it's not about raw talent. It's about a learned discipline and, frankly, deeply uncomfortable response to the inevitable failures and losses that are just part of the game. It's about disarming that internal enemy.
And the ultimate test of this mindset, the moment where it really clicks, you mentioned Dr. David Paul's thunderclap revelation.
Ah, yes, a brilliant illustration. Dr. Paul, he was a highly confident mechanical engineer, made a fortune inventing some mining drill, so smart guy, analytical mind.
Right.
He approaches the markets with this sophisticated software he developed, which consistently called for strong rallies. So one day, the market is crashing hard. But his software, his broker, his friends, even Elliott wave analysis, another technical tool based on wave patterns, everything was screaming that the market absolutely has to go up.
So he kept buying.
He kept buying on the way down, convinced it was just a temporary blip, a chance to load up more at cheaper prices. Classic supermarket trap thinking, right?
Totally.
But the market just kept dropping and dropping. He ended up accumulating this massive losing position. His account was bleeding badly, his confidence completely evaporating.
Then what happened?
Then his wife, who knew nothing about trading, innocently walks into his office. She glances at the screen, at the charts plunging downwards, and she simply asks, "But it is not moving up right now, is it?"
Ouch. Simple observation.
Devastatingly simple. She repeated it, just stating the obvious with this objective, almost childlike clarity, cutting right through all the layers of his self-deception, his expert analysis, his hope.
And that was the moment.
That was it. As Dr. Paul recounts, it hit him like a thunderbolt. He realized in that instant he wasn't trading the market as it was. He was trading his opinion, his desperate hope for what it should be. He was trying to avoid the pain of loss by clinging to a belief rather than just listening to what the market was brutally, undeniably telling him in real time.
Wow. This, he realized, was the deadly sin. Trading your opinion instead of the market's actual reality. That's the moment the matrix just shattered for him.
Okay, let's shift gears slightly. Let's talk about what actually fuels change. Hougaard talks about the raw, unsettling power of disgust.
Yes, disgust. It sounds negative, but he argues it's incredibly powerful. For him, escaping poverty, quitting alcohol, these profound life changes weren't solely driven by positive thinking or setting towards goals. They were fueled by what he calls away-oriented goal setting, by the visceral motivation of disgust.
Disgust with his situation.
Exactly. He vividly describes growing up in a wealthy area, then his parents divorced, and suddenly he's in this tiny one-bedroom flat. He felt the sting as inferiority when his friends wore expensive clothes he couldn't afford. That shame, that profound disgust with poverty, it fueled him. It made him hoard money, save obsessively, do whatever it took to move away from that painful reality. It was like this burning internal fire.
So moving away from pain is stronger than moving towards pleasure. He argues that for many people, yes, away-oriented goal setting is a much stronger motivational force than towards-oriented. He asks, rhetorically, would a picture of you in perfect shape motivate you more to lose weight, or a picture of an obese, unhealthy version of yourself?
Good question.
For most, he suggests, the latter holds more raw power. Disgust, he contends, is a far stronger, more persistent emotion than fleeting joy or happiness. It's not something you easily forget.
And he felt disgust with his trading.
Yes, he reached a point of profound disgust with his own reckless, unprofitable trading, finally admitting to himself that he was an awful trader despite knowing all the technical stuff. And confronting that uncomfortable truth unflinchingly became the rocket fuel that forced him to make profound, lasting changes. It was the catalyst for his entire transformation.
This leads right into his daily ritual, doesn't it? The Book of Truths, which sounds pretty intense.
It is intense, and it's a practice almost nobody else does, certainly not with his rigor. This isn't just keeping a basic trading journal. It's a meticulous, completely unvarnished process. He plots every single trade wins, and especially losses onto charts after the market closes.
Visually confronting the mistakes.
Exactly. He uses a PowerPoint file, visually arranging his old trades, every mistake, every triumph, every warning sign he ignored or acted on. He creates this personal visual history of his trading flaws. It's like, as he describes it, incriminating yourself over and over, forcing this visual confrontation with your flaws, your weaknesses, your patterns of self-sabotage.
He relives the trade.
He relives those moments, he says. Both the terrible ones to get me fired up on how not to trade today, as well as the good ones for inspiration. It's just an act of brutal, relentless self-honesty.
That sounds painful, but necessary.
He argues it's the only way to become meaningfully moving towards a better version of myself. It requires stripping away all vanity, confronting your raw imperfections, and seeing the unvarnished truth of your trading behavior without any delusion or excuses.
And re-experiencing the pain helps.
Yes, because by re-experiencing the emotional pain of bad trades in a controlled, after-the-fact environment, it helps build a new neuroassociation. It starts teaching your subconscious that the pain of seeing your mistakes isn't something to avoid, but actually a catalyst for positive change. This unflinching honesty, this deliberate self-incrimination. It's just non-negotiable if you're serious about seeking true mastery. It's how you finally break the destructive cycles.
Okay, so if normal thinking guarantees failure, what's the alternative? What do the elite 1% actually do? What's their playbook?
Hougaard reveals what he calls their anti-normal protocol. It's a set of radical, counterintuitive behaviors, and it starts with a simple but profound mantra. Flip the switch.
Flip the switch.
Yeah. When the losing 90% automatically assume they're right, desperately seeking confirmation for their often flawed beliefs, The winners adopt a chillingly different starting point. Assume I am wrong until proven otherwise.
Start from a position of doubt.
Exactly. This fundamental shift just reorients your entire approach. You move from seeking validation to maintaining constant vigilance and humility. It's a defensive mindset first, and only then, maybe, an offensive one.
And they don't avoid discomfort.
No, they embrace it. They actively seek it out. Hougaard states, I expect to be uncomfortable. I expect my trading to cause me anxiety. I am waiting for it.
Waiting for anxiety, that sounds strange.
It's not masochism, though. It's a profound form of mental conditioning. They understand that real growth, real breakthroughs happen outside the comfort zone. So they lean into those very feelings, the anxiety, the fear, the urge to bail on a position that paralyzed most other traders.
Well, what's the benefit?
They recognize those feelings as signals. Signals that they are pushing against their subconscious programming, doing something different, something that most traders instinctively run away from. They actually welcome that internal friction as a sign of progress, a sign they're breaking old patterns.
Okay, and this is where it gets really interesting, right? Where the psychology gets kind of mind-bending. They add to winners, never to losers.
Yes. This is the ultimate act of rebellion against your subconscious mind, against everything your primitive brain is screaming at you to do. Greg Deriba, a legendary S&P 500 pit trader, famously said, 99% still don't get it when they win. They start betting less. Bet more.
Bet more when you're winning. That feels risky.
It feels terrifying because your natural human behavior, driven by that fear of pain, that fear of losing the profit you have, is to reduce risk when you're profitable. You lock in the small gain, pat yourself on the back.
And then watch the market explode without you.
Exactly. But the elite traders, they know this instinct fights their own success. Adding to winners isn't just about squeezing out more immediate profit. It's about building new neuroassociations. It's about training your brain to embrace growth, to press your advantage when the market clearly agrees with you, rather than shrinking away from it in fear.
So instead of closing half a winning position,
An elite trader, seeing the market strongly validating their initial idea, might actually double their position size, turning what would have been a decent win into an exponential, potentially account-changing one. It's a deliberate, deeply uncomfortable act of overriding your instinct to protect gains. Instead, you allow your profits to run, to truly capitalize on the market's momentum. It's a crucial habit, but yeah, terrifying to cultivate.
okay, what else is in this anti-normal protocol? They define risk, not reward.
Yes, another radical inversion of normal thinking. The vast majority of aspiring traders, what do they obsess over? How much money they could make on a trade, right?
Yeah, setting profit targets.
They set these arbitrary profit targets, which inherently limit their upside. And then they get frustrated when the market blows right past their target after they've exited. But elite traders understand a fundamental truth. You can control, with precision, how much you are willing to lose on any given trade, but you cannot, with any certainty, control how much you will ultimately make.
Control the downside, not the upside.
Exactly. Losers spend their time thinking how much they will make, while winners liberates you from the tyranny of outcome-oriented thinking. It allows you to ride winning trends for their maximum potential, letting the market, not your preconceived notion of what's enough, tell you when it's time to get out.
And crucially, they buy strength, sell weakness, which is the opposite of the supermarket thing.
The absolute inverse of the supermarket mentality we talked about. Instead of bargain hunting for assets that have already fallen sharply, hoping for a bounce, elite traders buy into established trends that are already moving higher, or they sell into trends that are clearly moving lower. They ride the wave.
Paul Tudor Jones's quote.
Legendary trader Paul Tudor Jones summed it up perfectly. When someone asked him how far down he'd be willing to sell a falling market, he basically said, if it kept going down, I'd want to be selling it, not buying it. If it kept going down, I would sell it down to zero.
Wow, zero.
And if it was going up, I'd buy it to infinity. It's about flowing with the market's true energy, its undeniable momentum, not constantly fighting it with some misguided sense of value or trying to predict reversals. It's about aligning yourself with the dominant power in the market at that time.
This whole anti-normal approach, it sounds like it requires incredible patience.
Superhuman patience, as Hougaard puts it. He tells the story of his friend Adam, who was apparently a brilliant trader possessing supernatural patience. Adam could literally stare at a screen for an entire U.S. trading session and not place a single trade if his specific signals weren't there.
Days without trading.
Days, even weeks, just waiting for the perfect setup. But the tragic part of Adam's story is that his eventual downfall, losing his account, his house, his marriage, came when he finally lost that patience and discipline. Made one catastrophic, emotionally charged decision driven by a personal crisis, not by market logic.
So patience isn't enough on its own.
No, it needs discipline alongside it. And look at Navinder Saral, the flash crash trader. He also embodied extreme focus and patience, deliberately hiding himself away from all distractions in his parents' house to maintain his mental edge, sometimes making only a handful of trades per year. These stories really underscore that patience isn't just a passive trait like waiting for a bus. It's an active, relentless commitment, a discipline. Waiting for the right opportunity, even if it means doing absolutely nothing for extended periods, even if it means enduring crippling boredom while others are frantically clicking buttons.
So how do they do it? How do these elite traders cultivate this mental fortitude, this almost inhuman discipline? Are there specific techniques?
Yes, there are. They engage in what Hougaard describes as chillingly effective daily rituals of mental combat. It's like training for a psychological war. One key practice is simple breathing exercises.
Breathing, like meditation.
Sort of, but very specific. A simple 7 seconds inhale, 11 seconds exhale technique. The longer exhale is designed to calm the amygdala, that's the brain's emotional response center, the part that triggers fight or flight.
Does that really work?
Apparently, yes. This isn't some new age fad he's pushing. Even Formula One drivers, people operating in peak pressure environments where a split-second mistake can be disastrous, they use similar breathwork techniques to maintain laser-sharp focus and composure under extreme stress. It's about systematically reducing that internal emotional noise.
Okay, breathing helps. What else?
Beyond breathing, they engage in intense, deliberate visualization. This is powerful stuff. Hougaard himself, before he even places a trade, will imagine losing a massive sum, maybe the exact cost of his car or his son's college tuition fees. He makes the potential emotional impact as vivid, as painful, as real as possible in his mind.
Why would you do that? That sounds awful.
He lets the dread sit with him. He actively desensitizes his mind to it. He confronts the absolute worst-case scenario head-on before it happens. Then, immediately after dwelling on the potential disaster, he visualizes the opposite. Riding a winning trend higher, calmly and dispassionately observing the profits grow, training his mind to resist that urge to snatch profits too soon, training himself to stay calm as the numbers climb.
So visualizing both disaster and triumph.
Exactly. The goal, he says, is to act without fear, without hope, without anything but an objective assessment of the price action. It's active mental programming, not just passive hoping. It's like building psychological calluses, a form of mental inoculation against emotional swings.
And this creates a kind of positive loop.
Precisely. This powerful combination, the self-awareness, the breathing, the visualization, the disciplined execution, it forms this continuous self-reinforcing mind loop for optimal performance. It starts with trust.
Trusted what?
Trust in the underlying mechanics of the market, but critically, trust in yourself to actually follow your plan, to execute your strategy. This trust then supports patience.
The ability to wait.
The ability to wait unperturbed for those ideal setups to actually emerge, not forcing trades. Patience, in turn, feeds confidence.
Not arrogance, though.
No, not an arrogant belief you'll win every trade. It's more like a quiet certainty in your process, in your edge, and crucially, in your ability to manage risk effectively. That confidence dictates a positive inner dialogue.
Your self-talk.
Yeah, the ongoing conversation in your head that guides you through the discomfort and reinforces your discipline keeps you on track. And that positive inner dialogue supports flow.
Zone.
Exactly. That optimal state where you're deeply present and focused, where self-consciousness just disappears, and your decisions feel intuitive, almost effortless, guided by the real-time market action, not emotion. It's an entire ecosystem designed to rewire your brain for profit, designed specifically to override that inherent humanness that plagues and ultimately destroys 90% of traders. It's like discovering the secret circuit board.
Which brings us right to the final, and maybe the most shattering truth of all.
Yeah, the core message.
The ultimate battleground in trading. It isn't actually against the market itself, is it?
No, it's against you.
It's against me.
Against your own subconscious brain, which Hougaard describes quite bluntly as a rather simple beast. Its sole, primitive, overriding objective.
What is it?
To avoid pain. That's it. Full stop. Nothing else really matters to that part of your brain.
Just avoid pain.
This fundamental, deeply hardwired drive for pain avoidance creates two absolutely devastating traps in trading. Traps that doom most aspiring traders before they even get started.
Okay, what are the two traps?
The first is the pain of seeing a profit. Sounds weird, right? But your subconscious wants you to close that winning position immediately, grab the small gain, simply to avoid the potentially deeper pain of watching that profit evaporate if the market reverses.
So you take tiny wins.
You take small, inconsequential wins, constantly limiting your own growth potential. The second trap is the pain of loss. Your subconscious desperately wants you to hold on to losing positions, maybe average down.
Deny the loss is real.
Exactly. Because as long as the position is still open, there's still hope, right? The pain isn't fully real yet. It hasn't been crystallized on your account statement. So you let losses run and run, turning what could have been small, manageable mistakes into potentially account-destroying catastrophes.
It's a complete double bind. Damned if you win, damned if you lose, almost.
It really is. And what separates the 10% of consistent winners from the 90% of chronic losers isn't some secret indicator or access to better information. It's simply which brain they are listening to.
The conscious, rational brain versus the subconscious, pain-avoiding one.
Precisely. It's not about innate talent or luck. It's about deliberately training yourself, conditioning yourself to recode your brain's messages when pain comes knocking.
How do you do that?
Instead of reacting instinctively to fear and running away, cutting winners short, letting losers run the elite, 10% have learned, through practice and discipline, to hold fast and run towards the danger, not away from it.
Run towards the danger.
Metaphorically, yes. Embrace the discomfort of holding a winner. Embrace the discomfort of taking a small, defined loss quickly. This isn't natural behavior at all. It's a learned, practiced, and often deeply uncomfortable discipline. It's the ultimate act of defiance against your own ingrained biology.
So that constant internal combat, that systematic rewiring of your deepest responses to pain and pleasure, that's the unseen force.
That is the unseen force behind every significant win and every catastrophic loss. It's the single line, the core idea from this book, that changes everything about how you need to approach this game.
Your journey, then, to becoming a truly successful trader, it isn't about finding some hidden talent you think you lack.
Not at all. You reading this, listening to this, you're probably hardworking, you're likely determined, you're persistent, or you wouldn't still be searching for answers.
Right.
The transformation Hougaard describes, it isn't some sudden bolt from the blue, an epiphany, a moment of divine inspiration. It's a relentless daily battle, a grind against your own humanness, against the very instincts that serve you perfectly well in everyday life, but actively destroy you in the financial markets.
And it's a battle you absolutely must win.
You must win it if you genuinely seek true mastery, if you want a consistent path towards financial freedom through trading. There's no other way.
If you found this dive inside Best Loser Wins, Why Normal Thinking Never Wins the Trading Game valuable, make sure to hit that subscribe button and join us here at the Profit Cabal, where we decode the market's deepest secrets, one legendary book at a time.